With us on Point, Asian markets ended mixed as investors await a U.S. Federal Reserve policy decisions. Japan's Nikkei slumped 1.1%, while the Hang Seng climbed over 1%. China stocks were higher as the economies show signs of recovery, the Shanghai Composite Index gaining 0.5%. Let's go to Wall Street now, where the S&P 500 ended lower on Tuesday as the index was unable to bounce from a sharp sell-off in the prior session. The U.S. Federal Reserve will announce its decision on a new round of interest rate increases today, which is expected to be the largest rate hike since 1994. Analysts expect the Fed to hike rates by 50 basis points, but views that a 75 basis point hike was on the table have been growing. The S&P 500 lost 0.38%, the Nasdaq Composite gained 0.18%, and the Dow Jones Industrial Average fell 0.50%. Han Ten, who is the chief market analyst at Xfinity, joins me now. Thanks so much for your time on SABC News this afternoon. So the U.S. markets closing lower again yesterday. Just take us through what's moving the markets there besides the Fed decision.
Well, it is the main fear here, that being the Fed decision, right? That it has to get aggressive when raising interest rates. But beyond that, it's what those higher interest rates could do to the U.S. economy. It looks like the Fed may be willing to break the economy, so to speak, or perhaps hasten the next U.S. recession, and then obviously would have global ramifications around the world as well. Hence the sell-off that we're seeing, especially in riskier assets.
Han, talk to me more about that statement that, the Fed may be willing to break the U.S. economy. What impact would, let's say, the 75 basis point hike that's being priced in by the market have on the U.S. economy and perhaps beyond that as well?
Yeah, so keep in mind that in and of itself, a 75 basis point hike may not have much of an immediate impact on the real economy, but the signal that it shows to consumers, to economic agents, and to the markets, I think that signal is more important. And that signal being that the Fed is getting a lot more serious, a lot more aggressive about achieving its primary target, and that is to bring down or subdue red-hot inflation, and not just that, but also keep inflation expectations in check, right? So I think it's the idea is that with each incremental rate hike, it then continues eroding money supply and also eroding some of the demand with hopes of bringing down those red-hot inflation numbers.
Mm-hmm. Asian markets, a mixed picture there. Just talk to us about what's moving their markets and what's causing that market picture there.
Yeah, so Asian markets are certainly not immune to the major theme that we spoke about, and it's not just the Fed that is tightening interest rates or raising interest rates. More than 60 central banks around the world are doing so, and many in Asia as well. But a major outlier there would be China. So China is actually on an easing stance for its monetary policy. It seeks to help support the recovery in the Chinese economy as it continues to stumble and make its way into this post-pandemic era. And now, granted, you had some better than expected Chinese economic data out today as well. But overall, I expect Asian stocks to react in tandem with the global major themes.
Mm-hmm. Han, with so much nerves and anxiety in the market, I'd have assumed that safe haven commodities like gold would be doing really well. Yesterday, we saw gold declining 0.6%, closing at just over $1,808 per ounce. What led to that, and what's gold doing today?
Yeah, gold right now, as we speak, is trying to unwind some of those losses that it's seen of late. But I think overall, gold's ability to post substantial gains will be hindered by, again, the Fed's intentions to send interest rates much higher. So noting that as Treasury yields rise, that really raises the opportunity cost for holding on to gold because gold doesn't inherently pay out interest to those who hang on to it. So hence the appeal is away from gold, and that's causing gold to really lose its stature as a safe haven in this higher interest rate environment.
Mm-hmm. And tell me what the major currencies are doing today.
Yeah, overall, they are seeing some slight relief against the US dollar. My suspicion is that markets are perhaps taking the edges of their really aggressive bets over how hawkish the Fed will sound later today and about its intentions for US interest rates moving forward. But overall, we do find ourselves in a very supportive environment for the US dollars because, even though the Fed may send out a dovish surprise by not hiking, by selling 5 basis points today. But overall, the outlook is clear. US interest rates are marching higher, and that should spell more upside for treasury yields and perhaps the US dollar as well.
Han Tan, the Chief Market Analyst at Exinity, thanks so much for your time and insight today as we take a look at what's moving international markets. My colleague Nompumelelo Siziba standing by after the short break to bring you some more business